Welcome to OptionIncomeTrader.com, a site dedicated to sharing real-time income-generating option strategies with real money in real time. Let's look at our current position. We have a position made up of mostly QQQs and a little bit of USO. USO makes up a very small part of this portfolio, so we'll go ahead and analyze that one first. USO has a delta of 482, a gamma of -2, and a theta of 1.34, and a vega of -0.53, and it's made $50 since we've opened this position, and it's taking up $262.50 in margin to hold this position. We'll take a quick look at the chart and see what is going on with the chart. As you can see, we have made a pretty significant move to the upside. We sold, in this case, a 25 put, and we bought the 22 put, so we're well above even the next support area, which is, let's say, 27.50. Let's confirm that position here. The USO, we sold the 25 and we bought the 22. So that position is very healthy, and we don't need to do much with that. Let's go to where we do have the problem, which is in the Qs. The Qs has lost us about $900 to date, and it's carrying a delta of -727, a gamma of -87, theta of 27, and a vega of -39. This position is made up of a series of vertical spreads, and also a calendar or two is also in all these trades. The objective is to put on pretty small trades to make up a composite of a reflection of the market. The market has been on a strong run up, and we've been essentially fading that move by getting more negative delta, and that has resulted in a loss in this case. Let's take a look at the chart and see what the chart alright, as you can see, the Qs are at the top of the Keltner channel, which can be considered an extreme in technical analysis, but we want to look at some worst case scenarios. So we go 32, 31. Next stop is likely to be the 34 area for resistance. If we get to this 34 area of resistance, we have to consider doing something to protect us. Let's take a look at our profit and loss graph to see what's going on. We are currently at 32.38, and that's showing us a loss of roughly $900, although at expiration that loss would be roughly $260 if price were not to move any more against us. Conversely, if price were to pull back at all, we would be looking at probably a small gain. If we got to the Qs went to 32 at expiration, we're looking at a very small gain of $135. So if the market pulls back, we would stand to gain in a pretty significant way. If we got to 30, we'd be looking at a gain of $1,300. We want to consider worst case scenarios, so we want to look at what happens if it goes to 34 like we discussed. If the Qs go to 34, we're looking at a loss of $2,100 or so, and we would like to minimize that loss if that's what we're going to come to. So let's take a look at how we might manage this. Our Qs are made up of a lot of small positions, so we're able to go in and make some adjustments. We've got inventory both in the month of April and May. So the Mays, we can probably just leave that on to keep most of the position intact for a eventual pullback should that happen. The Aprils, we can exit some of the Aprils and perhaps roll some of the Aprils. We probably want to go ahead and take off the stuff that's hurting us the most, probably half of that, and roll the other half. So we'd be locking in some losses on some, but we'd be maintaining a position going forward.